Hello again, everyone. Welcome back. In today's video, we're going to take a look at the Dow Industrials, the Russell 2000, a few of the indicators. But before I dive into that, I just want to show you this last week we had a lot of damage. It was a very, very negative week. When you look at the 16 sectors I have listed here, here's what happened this last week. Not a single one was positive. 0 up, 16 down. Now, for the year, we still have 15 positive and one has gone negative. That's the NASDAQ Biotech, down 2.3% on the year. But the other thing I wanted to point out is when you go down this column and I look at all the different sectors and instruments I look at, the only one that was positive this week was the dollar. That is it. Everything else was negative. Pretty ugly week. The Grinch definitely came to Wall Street. So we got the Dow Industrials here this last week, down 3 weeks in a row. We're going to dive in and take a look. We're actually going to look at the Dow Diamonds. This was down 988 points this last week. Now, closing below this pivot low right here, which is the week of November 17th, that's a pretty big negative. The next one I'm looking at is this low right here around the 1st of November. The S&P 500 was down 120 points this last week and closing below the trading of the last 3 weeks, which got very compressed in here. So we'll see what kind of follow through we get. Now, when you look at this, you say, well, you know, it doesn't look that much different than what happened a few other times here recently. We'll see. We'll see where we go. The indicators are pretty ugly in terms of this whole last push to the upside. Now, when you look at the NASDAQ 100 down 491 points, look at this bearish engulfing candle. Pretty negative looking. So yeah, this has had some strength the last few weeks. We'll see where we go. We've also got some pretty negative divergence in here. When we take a look at the side-by-side between the industrials and the transports have been really got hit also. I mean, here's the industrials down 3 weeks, transports down 3 weeks, but look at the magnitude of the move that happened over here, down 819 points this last week. So a lot of damage. It's all the way down here near the 55-week moving average. You know, the Dow's not even close to that. So we'll see where we go and see what the implications of that are. Let's go back here to the home page. Let's take a look at the Dow Diamonds. So the diamonds were up 4.01 on Friday. So pretty good bounce on Friday. And again, here's that picture on the weekly view. So I get the weekly and the daily side by side. Now, the interesting thing here with the Dow Industrials, in case you haven't heard, I know it was all over the news. You know, the Dow had declined with this move coming down here. Let me look at this real quick. Yeah, because Thursday was a slightly up day, I believe. 326.87. Yeah, 323.42. So, you know, we had 10 days in a row, right? 2, 4, 6, 8, 10 days in a row. And it was the longest losing streak on the Dow Industrials since 1974. So, you know, not 1987, you know, not 2008, 1974. So that's pretty dramatic. We'll see what kind of follow through we get. The interesting thing that you're going to see both on the Dow Diamonds here and the Russell is the Trump trade, which here's election day. Here's the post-election day. Everybody's talking about, oh, the Trump trade. Everybody's getting excited because of Trump being reelected. And so the surge was happening in a lot of different instruments. And at one point, we got up in here, everybody's like, oh, you know, everything's in. The whole Trump trade's in. Well, they pretty much came back and you know, have closed that entire gap that occurred post-election. So we'll see what happens now. I mean, we've had one day in here, one bounce. The next support level I'm looking at on the Dow Diamonds is 418.71, which is right down in here. If that doesn't hold, then I think we're going to be heading a lot further to the downside. So when I take a look at the Elliott Wave picture, I'm looking for a fourth wave in here. I'm talking about a fourth minor wave, this right here. And because this was somewhat of a zigzag, I'm looking for this to be a little more sideways-ish in terms of where it's going. And based on the Elliott Wave count that I've got, I don't need this on this is a weekly. I don't need that on the weekly. Let me get rid of that. So if I look at these minute waves within this minor wave, third wave, typically what I would target is that the fourth wave would come down into that prior fourth wave over here of one lower degree. And that's this range right down into here. Okay. So that's a little more, we got a little more to go to get down into that range. And you could see, on a weekly basis, even, the RSI picture isn't very attractive. It doesn't look all that great. So here's where we sit on the daily. Here's that, we're definitely got down into the oversold, but you can bounce around and stay down in here for a while. We'll see what kind of bounce we get. We really haven't had that much of one, but that's the picture that we've got. I'm looking for a little more corrective activity. We may bounce around. We'll see what happens because this has been quite a bit of a downdraft at this point. All right, so that's the picture that we've got on the Dow Industrials, the Dow Diamonds. Let's take a look at the Russell 2000. So before I move there, I guess the net out I just want to leave you with is, is the bull market over? I don't think so. Do we have a big bear move coming? I don't think so. I think we have corrective activity, and that corrective activity can be very choppy and very volatile. So I guess that's the message. That's the takeaway. We're into a fourth corrective wave in here, minor wave, and we're going to have volatility and we're going to have the choppiness that you get with that kind of a move. And no one knows. It doesn't matter who you talk to. No one knows what kind of pattern you're going to get, what kind of price action you're going to get over the next 2, 3, 4 months. Okay. So that's what we're watching for. Just know if you're taking positions, make sure you know where your stop is, know where your uncle point is. All right, let's take a look at the Russell. Let me pull up IWM. This was up 206 on Friday and down 11.15 on the week. It was the biggest percentage mover to the downside of the 4 major indices. And you could see this has completely closed that election gap, post-election gap that occurred. And a couple of things we're looking at in here. I was looking at, if you look back over here where we had closes on this rally high, and you take the line across, it's really interesting that that line kind of goes right through the middle of this congestion, and it puts it right where we are right now. Let me just tell you what. Let me just go ahead and put it in there. Okay, so that's kind of eyeballing it in, not super exact, but it also shows that this is where we're getting a little bit of support kicking in. Let's take a look at the Elliott Wave picture that I've got here on the Russell. So right now, I'm looking for this to come back in a second wave down, okay? I think, let me just go to the weekly first. I think that we're in a bigger move to the upside, and within that third intermediate wave, I think we're in a third minor wave to the upside. And within that, I think we are working our way higher right in here. Now, this has been very, very messy. There's no doubt about it. Now, so we got a wave 2 that's pulling back and pulling back very sharp. Now, typically in a wave 2, I look for a zigzag. We'll see what we get. Right now, we haven't had any zag. I mean, it just keeps coming south. And I'll talk about this area right in here in a minute. If this continues to break down, though, and takes out this low right here, which is the August 5th low of 24, then I think we got something a lot more negative going on. And, I'll be looking at an alternate. But right now, it's not giving me any reason to move to that alternate. So I'm going to stay with it. Now, this whole count in here has been very messy. I think we have a leading diagonal pattern. It's not pretty, but we got overlap in here, 4 overlapping in here into 1. And this move here with the first wave up in a leading diagonal, let me just step back for a second. In a leading diagonal pattern in Elliott Wave nomenclature, the leading diagonal does not need all 5 waves to be zigzags. That has to happen in an ending diagonal, but in a leading diagonal, you just have to have a zigzag for 2, a zigzag for 4, and they have to overlap, okay? So now, what do I think's happening with wave 1? I think it's another leading diagonal pattern. So that's the only thing that I could figure out what's going on to keep this as an impulsive wave move to the upside. And so now the thing that surprised me though this last week, especially that big move down on Wednesday, is that this area right in here, which was resistance, became support, did not act as support again. And literally the Russell just sliced through that like a hot knife through butter. And I mean, there was nothing there. That was a surprise. So we'll see what we get. And as I said, if we come all the way down and start taking out like the August 5th low, then I think we've got something a lot more negative going on. But right now, this is the picture I'm looking at. We'll see what we get going forward. Okay, let me move back over here. And what I want to do is I want to take a look at a couple of indicators. Let me adjust this over here so we can see the numbers. Let's take a look at the high yield bond fund, HYG. We've had a pretty good breakdown in here on the high yield bond fund. And yeah, we had a snapback on Friday. We'll see how much more of a bounce do we get. This is very, very similar, to what happened. I was noticing this earlier. If I go back, let's see if I can scroll back over. You can see the breakdown that occurred back over here in the fall of 23. Kind of interesting. Similar type pattern, a little head and shoulders type pattern. Now, granted, this little shoulder is pretty small, but it does create a support level in here that got shattered on Wednesday. So we maybe just snapping back up into that area. We'll see. But, right now, you got to sit back and say the high yield bond fund is saying risk off in the market. Okay, let's take a look at the percent of stocks in the S&P 500 that are above their 50-day moving average. Pretty ugly picture. Okay, so we're down here, closed 2 days in a row below the 20% level, and then we got the bounce on Friday. So this is a lot of damage being done in here. And if you look at, if I scroll back, let me get rid of this, move this over, give you a bigger picture. So here was the fall of 23. So you can see when we start to get down in here, it takes some work before we reverse and start heading higher in a significant manner. Here was the banking crisis of March of 23. A little less congestion in that area. But again, you come back, the fall of 22, that major bottom, you can see how significant it got way down below the 10% level. Now, a year ago, we got below the 10% level, once, and then came back and touched it. So we're not there. I just think this indicates we've got a lot more work to do before we're going to be heading back up in any kind of a new bull leg. I think we've got a lot more corrective type of activity that's heading our way. So the Grinch is on Wall Street. We'll see how long he stays. Okay, so that's the picture there. And then I want to take a look at what's going on with the interest rate picture. This is really having a big impact. So here, the Fed cut the interest rate by 50%. Short-term federal funds rate, 50% back in September. They cut it by another 1/4 of a point here on Wednesday. And this is what the 10-year yield is doing. It just keeps pushing higher. It is literally sitting at 4.52%. the highest reading since over here on May 29th. And yeah, it's breaking that longer term trend line. Now, longer term, it's longer from a year's worth of downtrend from the peak that we had at 5% in October of 23. So got a little surge going on in here. And yeah, that's impacting several things, and significantly the housing market. So here's real estate. You can see the damage has been done in the last 3 weeks in real estate. That's a huge move down $5.22 here on the IYR ETF, U.S. real estate. The bank, S&P Bank ETF, down 3 weeks in a row. Kind of a reversal candle here, but down again fairly substantially this last week. And the same thing with the home builders ETF, down $8.39. And I think that was the biggest mover to the downside. Yes, it was 7.3% on XHB this last week. And then, of course, the two runner-ups, energy and real estate. So that's the picture for this weekend. Pretty ugly volatility coming our way. Everyone, if you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the YouTube channel, hit that little subscriber button. If you'd like more information like this, head on over to joehenches.net. We put out videos almost every day. Everyone have a great rest of the weekend, and Merry Christmas, Happy Hanukkah to everyone celebrating out there. And I think they even have down there in Australia and maybe a few other countries, Boxing Day, they call it, I think, the day after Christmas. Everyone, that's it for this weekend. We'll talk to you on the next video.